Hi, this is the Insurance Exam Queen, and we're learning all things homeowners today. Please make sure to like and subscribe to this video. I know you want to pass this exam, and I want some passive income on YouTube helping all you people pass. So like, subscribe, share, helps everybody out. Okay, so let's talk about homeowners policies. So there's many different types of homeowners policies, and one thing that's like important to remember is they kind of all have the same coverages. I mean, not exactly, but you don't need to worry too much about like which policy has which coverage. They generally all have the same coverages, and you know, you can memorize the coverages, and there's plenty of videos already available on the homeowners coverages. But now we're going to talk about the different types of homeowners policies. So the first thing to know is that homeowners policies can either be open peril or named peril. And there's a video on that if you need to go more in depth. But a named peril policy is a policy that says we will cover this, this, and this, and that's it. We will only cover what is named. An open peril policy says we will cover anything not excluded. So it will cover anything that potentially happens unless it's already been excluded. So open is actually the best that you can have because they will cover anything not excluded. Now, and so let's look at the different types. So we have an HO 2, 3, and a 5. An HO 2, 3, and a 5 is just for a regular house. Nothing weird, nothing different about it. It's not a condo, it's just a house. Now, why do we have 3 different policies available for a house? It just depends on how much coverage you want. An HO2 is known as broad homeowners, a broad form peril. So HO2 is broad, HO3 is special, HO5 is comprehensive. You do want to know the names of the policies, but the difference between these is just how much coverage you have. So an HO2 is going to be a named peril policy, right? It's a 2, so it's an even number. Even means divisible by 2. So it's a HO2, and it's going to be broad, and it's going to be named perils. So it's going to list out, you know, fire, lightning, wind, hail, BBB, ice golf. That's what's covered on an HO2. Then we have an HO3 and an HO5, and both of those are open peril. And that's why a 3 is special, just like a DP3 is special. HO3 is named special, and special usually means all risk open peril. So then what is the difference then between a 3 and a 5 if they are both open peril? The difference is that on a 3, because you have your house and then you have the stuff inside, your clothes, your shoes, your furniture. A 3 is only open on the outside. The stuff on the inside is going to actually follow the broad form perils. So a 3 is actually kind of a combo between a 2 and a 5, where the outside, the walls, the roof, the walls, the structure of the house is covered on an open peril basis, but all your stuff inside, your clothes, your shoes, your furniture, your pots, your pans, those are only covered on a named peril basis, so they will follow the broad form perils for the stuff inside. A 5 is open, so it has open peril coverage on the walls and the roof, and it has open peril coverage on the stuff inside, which means that an HO5 will also cover mysterious disappearance, where I had a necklace and it's gone. It could have been stolen. I could have lost it. I don't know. It's just disappeared. And that is available on an HO5, and none of the other policies have that. So again, an HO2, 3, or 5 is for a regular house. It just depends on how much coverage you want. HO2 will be the most restrictive because it's a named peril policy, and only what's named will be covered. HO3 would be the next one, where it is open perils on the outside, but it is named perils on the inside. A 5 would be the best policy you can get. It's open on the outside, open on the inside, and that's why it's called comprehensive. Then you have HO4, which is for a renter. So this is where someone doesn't own the house, but they live in the house, and they own all the stuff inside. All their clothes, shoes, furniture, pots, pans, everything that they own is, you know, their stuff in their apartment, and you can get insurance to cover that. So HO4 is renters or contents only. So I've seen it, you know, labeled both ways, so just be prepared to see it both ways. And your memory trick there is for rent. So an HO4 is for renters for rent. Now, since it is for rent, there's no coverage A or coverage B. And you need to go to the homeowners coverage videos if you need help with knowing those. But because it's a renter's policy where it's a contents only, we don't care about the walls and the roof. And that's what coverage A and B are, the walls and the roof. Well, we don't have any walls and roof for a renter, so there is no A and B. So an HO4 will actually start at coverage C. Then you have HO6 with this condo. And this is a condo is where like there's a big old building with like multiple units and you own this unit. And your unit is covered on an HO6. Now, there is somebody who owns this whole building. And if this whole building were to burn down, the owner of the building will rebuild the building and even rebuild your unit. But they're only going to build it to like the base model, the cheapest of the cheap, flooring, cabinets, carpet, whatever. If you have anything better than that, your HO6 is what will pay for that. So the building owner will pay to rebuild your unit to the cheapest possible version. If you have any better stuff, then your HO6 would pay the difference between the cheap carpet and the wood flooring. It would kick in the extra money needed to rebuild your structure up to that. The last one is an HO8, and it is known as modified. And the reason that it's modified is because it's covering like an old house. And I don't mean like old house like built in the 1920s and restored. I mean like built in the 20s and not ever updated, like outdated, old house, not been, restored. And it's not to say that every HO8 is an old house like that, but typically a lot of them are. The main thing with an HO8 is that the market value is less than rebuilt. So market value is what you can buy or sell a house for. Buy or sell a house. When you buy or sell a house, you're not only buying the house, but you're buying the land, you're buying the neighborhood, you're buying the location. And that usually the cost of buying a house is more than it would be to rebuild it because you're buying the land and the location. The insurance companies don't care about land or location. Their main thing is to rebuild the house if the house burns down. So that's what they're going to do. They're going to rebuild the house. If you can buy or sell a house for less than what it would cost to build one, they don't like that. Because that means, like this happened, my cousin, he bought like a $15,000 house in Michigan, a 3-bedroom house for $15,000. If that house burns down, the insurance has to rebuild a brand new house for $200,000. So they don't like that you barely paid 15 and now they have to pay 200. So they modified these policies when the market value is less than rebuilt. The biggest thing about the HO8 that's modified is, I would say, the theft limit. Every other homeowner's policy will cover theft up to coverage C, whatever coverage C is. Of course, there's some exceptions like jewelry and guns. They have limitations on them, which I would memorize if I were you. The coverage C limitations, it's like $1,500 for the theft of jewelry, $2,500 for the theft of firearms. Those have limits. But everything else, if it's stolen, they'll cover up to whatever coverage C is, but not on HO8. Theft is limited to $1,000 on premise, which means only things that are stolen from the house itself are covered. Every other homeowners would say if you have a backpack with you with your laptop and you go to Starbucks and someone steals that backpack, they will pay for what was missing minus, your deductible. On an HO8, they will not do that. It would have to be stolen from the premise in order for them to cover it. So this was a very basic rundown of the different types of homeowners. For the state exam, it is important to know the names and then to know the types. HO2 broad, HO3 special, HO5 comprehensive, HO4 renters, HO6 condo, HO8 modified. Definitely knowing that an HO3 has that open on the outside, named on the inside. They love to ask about that. And then one tricky question, they'll say, what would you recommend if someone rents a condo? They love to trip people up on that because they have renter and you go, oh, renter is HO4. But if you're renting a people will go condo. They'll go, oh, condo, that's an HO6. No, focus on the renter. If you're renting a condo, you are renter's insurance. So renting a condo would be HO4. So if you're renting a condo, it's not an HO6. HO6 is for condo owners. If you own the condo, you would need an HO6. But if you're renting the condo, you would need an HO4. So if this video has helped you at all, please like and again subscribe. Let's get that passive income going on. Drop a comment below if you have any questions, you need help on anything. And you can also email me at Insurance Exam Queen for additional support. If you failed your exam, I can review it, give you an analysis, and send it back to you. You can reach me at insuranceexamqueen@gmail.com. Have a lovely day. I'm sending all the love and all the vibes that you pass your exam. Have a wonderful day.